Ramani Dathi, CFO at TeamLease, is now joining us. Good morning, Ramani. Thanks a lot for joining us. If you could tell us first the trends in IT, because that's where the big growth was. But have the recent sort of developments, especially in the US, put a break on that?
No, definitely, because last year we had almost 33-34% growth in IT staffing business of ours. And this year it looks like there is a slight slowdown, especially in IT services companies. So this year we are projecting upwards of 20% growth, but at the beginning of the year, our estimates were close to 30%. So compared to that, definitely there is a slowdown. As of now, from products and captives, we are still having very good number of open positions. I think that's also because the temporary gap between demand and supply, because many IT companies have kept a hold on their permanent hiring. And the interim requirements, whatever open positions and requirements that they have, they're fulfilling with temp positions. So with that, the temp staffing side, we are not seeing any substantial impact, be it in terms of IT staffing or ITES related. So upwards of 20% even this year looks like very much possible.
Okay. So you're saying that tech companies have now kept a hold on permanent hiring, but they're going ahead with temp hiring. Is that a 1 to 2 month phenomenon? I mean, any kind of leads that you're getting on how things may progress in terms of permanent hiring?
Yeah, so staffing works like a shock absorber whenever there is an uncertainty or slowdown. So things are not so certain, especially for IT industry. So they are relying more on temporary employees, the contract employees, rather than increasing their permanent employee force, because that's more like a fixed cost for them. So the temp staffing enables them to variabilize their cost, plan for uncertainties, the ease of hiring and firing is much better. So that's what is, we are seeing this trend from last few months, and it looks like almost till March, this kind of trend may continue with the IT.
Okay, so in terms of numbers, you had done about general staffing hires of around 13,600 in the quarter gone by. Any guidance, any average that you can share with us?
So we would be doing about 4 to 5% sequential growth quarter on quarter for the rest of the year, and almost 20 to 25% overall growth in general staffing business as well this year. We are again seeing a slight slowdown in few industry verticals, especially e-commerce, edtech space, the new age companies, private equity funded companies. There we are seeing some sort of slowness. Otherwise, the traditional companies, auto, engineering, manufacturing, banking, insurance, and post-COVID, the recovery in retail, hospitality, tourism, travel, those sectors are very good. So because of our very well-diversified portfolio, while there is slowness in some industries, so we are offsetting with the growth coming from other industries. Also, this has been aided by increase in preference for formal workforce. So that is reflecting in the data of EPFO and other indicators published by various agencies.
Okay.
In a way, what you're saying, I mean, not what you're saying, but the macro uncertainty is equal to more temporary hiring, is equal to better prospects for a company like TeamLease? Does that equate?
If the uncertainty is temporary, definitely yes. But however, if it turns more into like a recession, just like any other industry, we will also be taking a beating. But historically, if you look at the trend, whenever the times are uncertain only for a brief period, maybe 3 to 6 months kind of time frame, staffing companies have always benefited out of it.
On margins, your Q1 margins were weak, in fact, just about 1.3%. Has that reversed, and where do you think you can end the year with?
So we can end the year with similar margins what we have posted last year, which is close to 1.7, 1.8% for the full year basis. And that's also because, as we said, we have made some investments at the beginning of the year in terms of building our capabilities around sales, hiring, and other technology investments. Those have been fully absorbed. So from now, every quarter, there will be a sequential improvement in margin, both in absolute terms as well as margin terms. However, the inflation being kind of settling down, we should be able to see a sharper growth in our margin starting Q3.
Okay, we'll leave it at that. Thanks a lot for joining us, and all the best for the rest of the quarters. Okay, that's the word coming in on hiring.